I'm Alex Miller, and I'm a director with FMI Capital Advisors. So as we enter 2017, we identified 3 things that we believe could be factors in driving increased M&A activity for the year. The first is speculation over increased infrastructure spending. The second is sustained international interest in the United States market. And the third is what could be a shrinking gap between seller and buyer valuation expectations. So first, speculation over increased infrastructure spending in the United States. One way to look at this is that if public company valuation trends are any indicator of investor interest, then we're due for a robust M&A market. Speculation over increased infrastructure spending has driven significant increases in public companies' stocks in our sector, which oftentimes are a predictor of future acquisition activity. This need for infrastructure spending is also one of the key drivers of sustained international interest in the U.S. market. And this is obviously something that FMI has been talking about for a number of years, and we continue to see sustained international interest specifically for acquisitions in the U.S. market. While to date that has not resulted in as many closed deals as we would have expected, we believe that over the next few years, this sustained international interest is going to result in actual acquisition activity. Finally, the third and final factor that we identified for 2017 is what might be a shrinking valuation gap between seller and buyers. Sellers have had several years of good, solid, profitable performance, and so their performance might finally have caught up to the valuation expectations. Similarly, buyers view the next several years somewhat optimistically, and what has often caused a discrepancy between what sellers expect and what buyers are willing to pay is shrinking in several markets where the demand for acquisition interest is the highest. What was different about 2016 is that we lacked some of the big mega deals that we saw in prior years. So what we see is that buyers today are prioritizing smaller niche acquisitions as opposed to the mega strategic kind of industry defining deals that we've seen in prior years. This was also echoed in our survey. Buyers indicated that small strategic deals were the top priority for those firms that had indicated that acquisitions were part of their acquisition or part of their growth strategy. Similarly, we continue to see large firms be far more acquisitive than smaller or mid-sized firms. As job sizes grow and as the share of large projects continue to dominate the United States infrastructure market, the demand for large, technically sophisticated firms is driving a bifurcation of the industry between small niche providers and large providers. We really wanted this time to include the view of our industry leaders. And what we have found in the construction and engineering industry is that it's really the buyer appetite that spurs acquisition activity. Given the demographic changes in our industry, there are a lot of sellers, and oftentimes it's the buyer appetite that spurs whether or not we have a robust M&A market.